Silver, it's either going to go to 200, which I didn't think it would be, or it would crash from here because it was the fast horse. It ran ahead of everything else, or rather, the only thing that you have to think about is how far ahead of gold has it ran, because it's all about gold. Okay, this is all about gold. Gold is what it is. And you, for sure, silver has crashed, but gold hasn't. Gold's pulled back, under 20%. 25% is a crash. Okay, and when it comes down in a lump, in that 25 or more is a crash. 30% is a big crash, 50% is a very, very big crash, and silver has gone into that zone of sizable crashes, but only because it ran ahead. And if you think that silver should basically track gold, well, it didn't track gold, it spurted on, and gold had a run too, but nowhere near as much, and now it's pulled back more in line with gold, and really this phase won't be over until it sinks back up with gold trading and gold's performance.
Silver's recent crash has rattled traders, but market veterans like Clem Chambers argue it's more about relative excess than real damage. Silver surged far ahead of gold, becoming the fast horse in the precious metals race. While silver dropped into crash territory with declines over 30%, gold merely corrected, staying well below true crash levels. Since silver ultimately derives its value signal from gold, this pullback represents a resynchronization rather than a breakdown. Gold remains the anchor of the metals complex, and silver's volatility reflects how far it temporarily outran gold. This phase likely ends only when silver realigns with gold's trend and performance. Now, we present the clips from Clem Chambers' interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Go back to the 70s and look at things like sugar, and gold and silver, pretty much everything back then. And if you look back even a few months to cocoa, you'll see it there too. Yeah. So boom, bubble, bust is the cycle. Now, where the repricing ends, at what level, is really the key that a lot of long-term holders will be thinking about. And we've had a bust in silver and it's pulled everything else down. And now we're in a period of the re-establishment of equilibrium. Yeah, I don't think we're going to have a pullback back down to where it started, which in commodities can often happen because the main driver, and I keep saying it over and over again, and people are starting to think he's not mad, maybe he's got a point, is gold is for war. Gold is for war. And China versus America, toe to toe, at an economic level, well, it's already here. The question is, does it get any worse? Does it get any more, go more towards the kinetic end of that kind of thing? And that is all about Taiwan. And actually, it would appear that China had a little bit of a setback in their plans because Xi and the PLA have had a bit of a face-off over who knows, but let's just say it's quite likely to be the fact that trouble in Taiwan was scheduled to be April, May next year. And maybe the PLA were saying, we're not ready, or rather, could we put it back a bit? Or we don't have enough ships, we're dragging their feet. And Xi, said, no, you're not dragging your feet, and kicked those generals out. The rumors are there was going to be a coup against Xi. I doubt it, because those are the sort of things that, you hear and they're just rumors and it's all exaggerated. But for sure, if Xi, years ago, 2 or 3 years ago, he came out and announced PLA will be ready by 2027. Didn't say ready for what, but you don't have to be a genius to work it out. Yeah, and obviously, if China tried to reclaim Taiwan, oh man, that is just off the dial. Difficult. Let's just say, as the Asians say, difficult. And that's what's been driving gold, because a conflict involving America defending Taiwan or trying to defend Taiwan or getting very upset against China for trying to take Taiwan, it is just a massive off the dial big deal. It'd be the biggest thing since, the Cuban Missile Crisis. So that's why gold is going. And funnily enough, gold is for war. Guess who's been buying it? China. Everybody's been buying it. Poland. Gold is for war. And that's because if you look at the people running the show in the world, apart from perhaps Modi, they're all very, very bellicose. Trump is incredibly bellicose. I mean, Xi for a Chinese leader is very bellicose. Obviously, Putin, you don't have to even finish that sentence. And so the drumbeat of global stress equals the increase in demand for gold. And that's what's driven the price. And, it's going to continue, isn't it? But now we're going to get a equilibrium repricing of gold, and everything will gold will be the anchor for a repricing and equilibrium of platinum, palladium, and silver. So that's where we are right now. And of course, it's like being when you're on the road and you hear a funny noise coming from your tires. And you go, did I get a flat tire or am I running over ridges? And normally it's ridges rather than you've got a flat tire, but sometimes you've got a flat tire. So this is where we are today, in that position of going, it's up. Oh, thank goodness. Oh, it's down. Oh, no. Oh, it's up. It's up. Oh. And that is what's going on. And that's a settling, hopefully, if you're a bull, or it's a preparation for a big drop if you're a bear. I'm not a bear. I'm a bull. I think we'll settle down, and then we'll see in a few weeks, a few months, that we will then get a breakout, or a breakout either way, because we can just sit there and watch it going, please don't go down any further, because if it does, it's gone back up again. Oh, if it breaks, it came down again. And we'll be watching to see what happens, which is what I've been doing in Bitcoin, because I was expecting to break down at some point. And actually, the last few days, it's occurred. And I've been saying on various people's show, Bitcoin's going to go to 30, 40,000. It will break down, blah, blah, blah. And then it does. So I've been watching Bitcoin with people saying it's going to go to 1 million, billion, trillion, and me saying it's going to go to 30,000. But it was in that repricing zone where you can just sit there and watch it and have your whoopee level and your oh no level already drawn on your chart to tell you whether it's going to go down like a rock or up like a rocket.
Commodity markets move in familiar boom, bubble, bust cycles, as seen in the 1970s with gold, silver, and sugar, and more recently in cocoa. Silver has already experienced its bust and is now entering a phase of equilibrium repricing. Unlike past cycles, this reset is underpinned by a powerful macro driver. Gold is a geopolitical asset. Rising global tensions, especially around China, the US, and Taiwan, have driven sustained central bank gold buying. Gold now acts as the anchor for repricing across silver, platinum, and palladium. Current volatility reflects settling, not collapse. For bulls, this looks like consolidation before the next decisive breakout. Let's get back to the interview.
Pay attention. Gold is for war. So if we're going to head towards war, gold is going up, and so is silver. If it's not going up, if we're not going to go towards war, it's going to go down. That's all there is. There's only one war, and that's China versus America. Very simple. Very, very simple. Get your head around that. It's the big one. It is the big one. China versus America. Do you realize how catastrophic that is?
I do, unfortunately.
Yeah, so that's all you need to think about, really, isn't it? Yeah. And that's why it's going up. And they've said it. I mean, just listen to Trump, just listen to Xi, just listen to Sarah Payne, the blooming military strategist. She's panicking, and she's a blooming expert, historian on this stuff. And I just worked it out by listening to what was coming out of the I mean, come on, the Secretary of Defense. He's not the Secretary of Defense anymore. He's the Secretary of War. I mean, that's all you need to know. You don't have to worry about solar panels and the death of the dollar and any of that. You can throw that out entirely. Gold is for war. Greenland, come on, that's only days ago. What were they saying? We've got to protect ourselves from these guys over the North Pole. Well, it's not protecting from Putin with his 150 million people, no money, is it? It's the guys next door to him, isn't it? China, with the biggest GDP in the world. I mean, if you can't benchmark that as being overwhelmingly important to precious metals, then why are we talking about anything else? And people keep missing it, right? I mean, I just have to ram this down people's throat because this is the driver. Everything else is irrelevant. China versus America. Anything else relevant? Is there?
Not really. Not
no,
really.
Nothing at all.
If you really condense it, that's really what it comes down to.
It's existential, isn't it?
No.
Yeah, and they're all saying it. It's not like I'm some crazy paranoid with my hut up a mountain and a load of bully beef. They're blooming well saying it. They're saying it.
Yeah.
Right?
Let's stay on that topic because you opened with it as well. So
yeah,
let's stay on that. Like
over and over again, we are on that road. We're on the road, and every step we take towards it is another few dollars on the price of gold. That's it. When I'm not ramming this thought down people's throats so that they get a grip and start thinking about it, I say the ever increasing ratchet of global tension, because that's the, politically correct way of putting it, isn't it? But that ratchet has a destination, yeah? And you can't keep turning that ratchet until you reach it. You can stop turning it, and you can undo the ratchet and all sit back and go, hey, let's be cool and groovy, man. Yeah, wow. No, we can all be friends, can't we? Let's be friends. Yeah. But America wants to keep its primacy. You don't need to be a genius to confirm that. And it's it's lost it, basically. Yeah, so how does it get it back? Well, if you've got a wild man, he ups the bets, doesn't he? And that's what you're seeing. It's not someone going, I think we'll do this gently. I think we'll do some restructuring of our economy slowly, and we'll be very nice to everybody. And, we'll do this nice thing, and we'll be kind, and we'll be clever. And, you go, bang, 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 bang. We don't have a Secretary of Defense anymore. We have a Secretary of War. Give us Greenland. We're going to bring all the rare earth on board. We're going to put up tariffs, right? Well, that's trade war. Notice the second word. Well, after trade war, what do you have?
Kinetic.
Yeah. If you come down the pyramid, where do you end up? If you don't win the trade war, or if you don't become primacy again, what happens next? You give up, of course. That would be good. If America just said, look, China, 1.4 billion people, they work twice as hard as us, and they've got all the infrastructure now. We'd be cool and groovy. We'd be a Europe. We'd be nice. We'd be a destination. We'd be a holiday place. That'd be great. Who wants to go into apocalypse? Let's just be cool about this. Gold will go like that, without a doubt. Gold will go through the floor. Yeah. So it's only this escalation that we're seeing, ever increasing ratchet of global tension. That is the thermometer of that is gold. Yeah. So if, for example, they get together in the Middle East over the next weekends or whatever, and Putin says, yeah, sure, we'll dig a trench and we won't come over it and we won't do it again, promise, right? Gold will go down, not by much. I mean, it might have gone down because of that is what's going to happen, right? Because you don't see it in the news. You see it in the markets first, and then you see it in the news. We are the last to know. That's why you look at charts, because the first to know are putting their bets on, right? Yeah. So I don't think that is the case. And it probably, if that is going to happen, that's already in the price.
Gold's price action can be distilled to one brutal macro driver, war risk. As this transcript argues, gold is the market's thermometer for escalating global tension, specifically the existential rivalry between China and the United States. Every ratchet higher in geopolitical stress adds dollars to gold, and by extension silver. De-escalation would crush gold prices. Escalation propels them. Trade wars, military posturing, Taiwan risk, Arctic strategy, and central bank accumulation all point to the same conclusion. Markets are pricing conflict before headlines confirm it. Precious metals move first. News follows later. Strip away narratives about inflation or green tech. Gold is signaling one thing only: rising geopolitical stakes. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest video. See you in the following video. Thanks for watching.